Welcome back, traders. Hoping you banked some profits from yesterday's tech class that had us toasting new highs. But man, today served up a reality check with the broad sell-off that tested every support line in sight.
Yeah, it really did.
It's days like these that remind us why pattern mastery pays off big.
Absolutely.
You're locked into the Stock Market Summary Series, and just remember, none of this is buying or selling advice. We're just here to provide market commentary, but nothing we say here is financial advice.
Oh, that's right.
Hopefully you guys know that by now, but gotta say it anyway. Okay, let's get into it.
It was truly a textbook classic breather after that big run we saw. Record highs followed by, well, this.
A pullback.
Exactly. The tape just flipped to a broad-based pullback. The Dow ETF, DIA, it tested its own 20-day MA, ended down a negative 0.55%.
And QQQ, the NASDAQ ETF, tech heavy.
Yeah.
It showed that usual resilience, right? Only down, what, negative 0.12%? Pretty impressive, actually.
Relatively speaking, yes, very resilient.
But the small caps, IWM, they slipped harder, down negative 0.64%.
Mm-hmm. And that index is still kind of hovering right around that $245 prior all-time high pivot we've been watching.
Right, that old resistance becoming potential support. The sentiment overall felt pretty bearish, though. Consumer staples, XLP, was the only green sector.
Low lone holdout, yeah. Managed a small gain, plus 0.32%. But the real pressure, it was concentrated.
Where do we see the worst of it?
Industrials, XLI, they lost a bruising, negative 1.48%. And energy, XLE, dropped negative 1.36%. And XLE is where we saw the most significant technical drama unfold today.
Okay, let's definitely unpack this XLE setup. It sounds like a vital lesson in, well, technical reversals.
It really is.
So XLE broke out higher from that symmetrical triangle weeks ago, right? We talked about that.
We did. A clean breakout initially.
But then it failed, fell back inside the pattern. And then today, boom, aggressively dropped below the triangle's key support trend line.
Exactly. And that specific sequence, that failure, it's potent. Des calls this a death hook.
A death hook?
Yep.
Why is that so powerful? What's the dynamic there?
Well, the power comes from the psychological failure. You know, a death hook fakes out the initial move. It traps all the early believers.
The bulls who bought the breakout high.
Precisely. Traps them. And when those positions are forced to liquidate, it just fuels this disproportionately fast and sharp move in the opposite direction.
Ah, okay. So it's pure pattern reversal driven by trap supply.
That's it. And this really underscores a key piece of trading wisdom. You must cap risks tight when hooks reverse like this. Don't fall in love with the setup. If it fails, it fails.
Good advice. And, you know, techniques for spotting these pivots, managing the risk.
Yeah.
That's stuff we dive deep into in the Grok Trade Mentorship program.
Absolutely. Recognizing the failure is step one.
As always, guys, if you've got a stock you're watching or maybe a question about the markets, drop it in the comments. We might cover it in an upcoming episode.
Yeah, let us know.
And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free. It helps us out in a big way.
It really does.
And click subscribe, too, so you don't miss a beat. You can always unsubscribe later. Okay, speaking of patterns driving things.
Right, we have to talk context. The government shutdown is, what, grinding into day 9 now?
Still going.
And that's stalling those vital labor snapshots. So this data drought, it just amplifies the importance of pure technical analysis, like we said last week with the momentum grind. When you can't trust the headlines, the chart doesn't lie.
And you can see that pressure maybe showing up in currencies. The U.S. dollar index, DXY, it's picking up steam again, heading higher.
It is. And remember, a rising dollar tends to act as a headwind for U.S. equity.
Especially the multinationals, commodities.
Exactly. So that adds fuel to this current broad-based pullback.
So what's next on the data front? Anything soon?
Heads up for tomorrow, the Michigan Consumer Sentiment Prelim is the next key item. Previews suggest steady vibes, particularly from stockholders feeling that wealth effect.
Okay, so we'll watch that. Could give us a read on underlying consumer strength.
It's the next piece of the puzzle we get.
All right, let's shift to the volatility players, crypto and metals. Bitcoin slid 1.9% today. And you know, spotting these kinds of holes, these high-stakes pivots, and managing them, again, that's exactly what we teach in the Grok Trade Mentorship. It's not just about the pattern, but the confirmation and the context.
Precisely. Now, metals told a divergent story today. Gold, GLD, got hammered.
Yeah, down 1.85%. Big pullback.
Sharp pullback after failing to hold that milestone breach past $4,000.
But silver, SLV.
Contrast that with silver. SLV staged a pretty remarkable recovery. It had this massive early session capitulatory spike downwards.
Looked ugly early on.
Really ugly, but it recovered to close with a slim gain, plus 0.34%.
Wow. So what does that suggest?
Well, it suggests that while gold failed on its extension attempt, silver might have managed to just wash out all the weak hands in one big volatile session. Found its footing, maybe.
Interesting divergence there. So all in all, how do we tally today?
I'd call it a disciplined pause. It definitely tested nerves, no doubt.
Yeah, it did. And it really underscores why watching trend lines, anticipating these potential hooks, rather than just chasing the roar of the crowd, why that's essential for, longevity and trading.
Absolutely. And look, setups like today's XLE death hook, or really understanding the nuances of Bitcoin's sustained $120 K hold, that's exactly why Grok Trade's mentorship program exists. We provide the pattern spotting skills, the volume confirmation techniques, the detailed risk tweaks, all through one-on-one coaching until that unshakable market instinct is built.
Like running through those SMR, TLT, OSCR, MARR tests we've discussed.
Exactly. Until the process just becomes second nature. That's the goal.
Excellent stuff. Okay, folks, that's the summary for today. We'll catch you tomorrow where we'll unpack that Michigan sentiment data and whatever fireworks earnings decide to ignite.
Looking forward to it.
Have a great rest of your day, everyone.